So thank you, ladies and gentlemen. We welcome once again on Felix Parss strategy. Felix Parss strategy. But there are certain golden rules I want you to understand. So follow me through as I put to them one after the other. First is that three-step market entry confirmation. Number one is called the order flow. Order flow means where is the market going to? Are you getting me now? Is it going down or going up, or is it sideways? So first thing, that are three conceptual activities or three cardinal activities in your mind as you're coming into the market is the first thing. What are the three steps? First, order flow. That is, where is the trend? Where is the market going to? Where is it coming from? That must be established. And we just show you simple way in one random stuff how to achieve that. Number two, you want to look at, are there areas that can call back? Okay? Are there areas that can call back the market to say, come, you didn't do this place well, come and do it. Okay? And then market will say, okay, I'm coming, let me come and do it properly and continue my journey. These are things you need to understand when it has to do with market. Number one, where is it coming from and where is it going to? Oh, fine. Oh, as it's going, did it leave anything behind? Some load that are very essential for it, for the journey to be moved, to get faster. Yet, there are things. So those load that are left behind is likely going to come. And what can we see to know that this guy is reversing to come and carry those load? This is another way, and that's what they call about liquidity area left untouched, because market is a balance of books. All right, market is a what? A balance of book. Please, I'm not going detailed teaching this just to show the strategy. So now I just read them out. Now if you want to learn detail about how this thing works, then maybe you now need to join us on our inner cycle to know how to use those things. So what we do is simple strategy that can give you making average of $20 to $200 on a daily basis by doing it yourself, not giving your money to anybody, not a scam, not Ponzi, but looking at the market. Imagine something of $7.9 trillion in 24 hours. You can't afford to look for a means of getting $20 out of it. Now, that's not going to be a beautiful thing, right? So now, look at it and look at liquidity sweep, and then look at aspect of the entry. So entry position, talk about the candles, the pattern, efficiency field in lower time frame. Then discipline to your expectation and keep your strategy simple yet dynamic. That is, your strategy is very straightforward, dynamic, not a cast in stone. Because market change, if you change, you're able to change, align with it. Okay. Now, every of your entry goals is a minimum of 2:1. That's 2-to-1 ratio. It is, if I'm losing $2, I should make $4. If I'm losing $10, I should make $20. That should be your target. So any trade you are probably trying to enter into and you can't find a region where this can be achieved, you want to actually restrict yourself. So say keep to it, and others can be trailed. That is, other training or opening market can be trailed, but make sure the first target you're able to achieve 2-to-1 risk reward ratio. The next one, take only A+ setups and always wait for your setup to come to you. Very, very important. Now, always trade the two sides of the coin. And then, meaning, consider alternative scenario while targeting your move. Now, I want to look for a buy, but as we equally check some factors that can make the market reverse now, and this reversal could give me money that I'm looking for in the buy, then why don't I take the trade in that way? That's what called alternative. The two sides of the coin, right? Right? Kill fears outrightly. Never delay your entry because of fear of being wrong or losing money. Sometimes we're afraid of losing money, and sometimes we're afraid of being wrong. What if so why will I enter this trade and I enter wrongly? No. You have defined the condition to be met and for you to enter, so stick to it. Then stick to one instrument at a time if you are scalping. This is very, very vital. Now, quickly, let's go into the trading view, and so how we do this Parss strategy is very, very important. And I'm going to take you around all of the instruments. The same thing is applicable to this. Now, we could see this now. And this Parss is called price action support, price action resistance and support strategy. That's what I call Parss. That's my strategy. Okay, and especially for beginners. Now, this is an instrument that, if you see what it has done today, was massive. I actually took this trade, and the same thing, I took another trade on gold, And I think gold is still even respected itself on that same vein. Now you can see my market. I took gold. I sold gold down to this point and I still took it up. How did I identify that? How did I arrive at this point of doing it? Now let's look at it, the step. So the step of you trading, either it is gold or GBP USD or Euro USD, anything, it doesn't matter now, or USD JPY, it doesn't matter. How do we go about this trading? How do we achieve this? We traded this yesterday, and I told a lot of people that this guy is still sending up. So how do we get to that point? Now, quickly, let's look at it. Now, number one is that you're going to look at the higher time frame. Where is the market going to? That's very, very important. Now, where's the market going to? Now, I use two supporting tools, especially for beginner. So write it down. There are three supporting tools I use for beginners. Now, indicators. So there are three things again so three things are very strong. Number one, the trend of the market. Number two, the momentum of the market. Number three, the structure of the market. Now, so where is the trend? Okay, so we have indicators that you can use to help yourself support the trend. Okay, you want to see the price, then where is the market going to, which is the trend, and then you want to see the momentum. The price, the trend, the momentum. The price, the trend, the momentum. Get it right? The price, the trend, the momentum. The price, the trend, the momentum. Now let's go. So now for us, we have seen the price. Any time frame you can see the price. So, but as a trader that you have come as your business, first you want to start for the day. Yes, you can hear a lot of information, and they will tell you that there's no point use if you are a scalper or a day trader. There's no point you checking daily candle. Well, it's true, they can be right so that to save yourself from unnecessary stress. But along the line too, there is a need for you to see the bigger picture of the market. Does that make sense? All right. Now we said the first thing you must do when you come into the market. So this is a chart, this is a trading view. It's free. You can register free. Nobody charge you to register free on this account. Now, this is what will happen. We said the market must be identified. Now, ordinarily, this market is a downtrend, right? How do you know? Because looking at it here, this was the highest, that's where the market was coming from. And then we have, a low in the high, another low, or perhaps here, this one up, okay, a low, another high, another low, another high, right? And then we have a massive low here. And then we have another high because it's lower than this. Then we have a low now, but never got to this point. This is where the challenge is coming from now. The market is set to change in its movement, all right? Now, this is purely what we call market structure. Higher, high, higher, low, lower, low, lower, high. And they said the market is divided into three, either up, down, sideways. I'm not supposed to be teaching this. If you want to know detail about those things, you can go to my section, go to my YouTube channel, just click and check, like the sections, and then you can follow up other training I've done there. Or probably you can chat with me on the phone number +234 90470 44998 +234 90470 44998. Now, quickly, let's go, everybody. Now, I'm coming a day, and I want to check. There are things I want to check. Now, where is the lowest of the market so far, ordinarily? Now, you're going to mark out the lowest so far for that market. So, this on daily time frame. Now, if you're a scalper day trader, you don't need to come to daily. You can just use 1 hour time frame is okay for you. But I love to go in my larger portion. This is a low, and then this is a high. Okay. So on daily time frame, I'm checking the immediate swing high and immediate swing low, which is this and this. Now, so where is the market now? Then other thing I could check in the market, I call them pivot point. Okay. So the market is a downtrend, but if you look at it now, market want to now start retracing because this is the lowest, lower low, and this is the high. But the market returned back here. Instead to break this low, it never did. And then it's now turning towards this. Maybe get rejected there because sometimes in extreme cases, markets to continue breaking the next structure, it will return back and grab liquidity. Just like I told you, the market is going somewhere and he forgot something, you want to go and pick, probably get there. Except and if you return back to that point, you ought to pick something and decide to say, I changed my mind, I'm not going again. I'm tired of going to where I was going. Let me just go back home, right? and where I'm coming from. These are scenario. This is live scenario I'm just giving to you. It's about decision, okay? Now, I've gotten the low and the high here. Now, other thing I check is what I call pivot point, okay? There are points at which market get to and reacted massively. And this example is here, all right? So you may not get it as proper as I am doing, right? But I just want you to understand it. If you can understand this, there are advanced teaching I teach, which I'm not going to show here, but just this one as basic, okay? Now, not all areas are so important. Not all areas are so important, but sometimes I mark as much as possible because our strategy is called Parss. So you have to work on the Parss strategy and then what you need to do. And most time, this thing is good to be done in what we call pre-market analysis. Now, if this is done, I want to step down. This is now top-down analysis. I want to step down to a lower time frame, which is like 4-hour time frame, okay? Now, I've come down to 4-hour time frame. Are there other pivot points I could identify on lower time frame, which is the 4-hour time frame? Let me remove our trade of yesterday. Was a beautiful trade, right? Now, are there areas again that you need to check on? Okay, there's something I normally do again. So let me quickly do that before we move forward. Now, another thing I do, I haven't done this, is to check the yesterday candle close and open, right? Or sorry, high and low. So which is called the PDH and PDL, okay? So we have the PDH and PDL. Sometimes I separate the candle differently and I do like this, okay? Just follow this step. You can watch this video again and again to help you. So sometimes I just do this, PDL, which is the previous day low, right? And I say, okay, stay here. Now I could tick in this guy, this candle, this line, and then this other one. Most time I tick in it to know the difference, right? So I tick in it to 3 just to separate it, and then like PDH. All right. So now I've gotten this as previous day high and previous day low. Very, very important. Now, so I'm stepping down to 1 hour, 4 hours. Now, in 4 hours, I've stepped down to 4 hours. Now, sometime you can see that going back to 4 hours, you see that this market is now an uptrend. But on daily time frame, this point is an important point that the market need to grab off. You get it? This market need to grab it off. Let's look at it. We go over here. Okay, this was a low and this was a high. So you can see this place is so far. So if the market, so this is the place where sometimes we are caught in between. If the market travel here, you now think that the market has totally reversed. No, it has not. You need to now break it. So if it breaks it, then you are now say, okay, the market is already changing entirely. Okay, so now, so go back to 4 hours. Like I've said, the market is showing a low, a high, right? A low, and then this high has not even been created. So that means market could sweep this liquidity again and sell down. Do you get it? But that doesn't mean our past strategy will make you to make money even if those things didn't work out. So that means you are looking here, 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 here. So now let's go quickly, very good, everybody. Now we have marked all of those points that are very, very important to us. Sometime, so this is another point left behind. Remember, we're trading Parss, and every swings in our Parss strategy, it's important because it gives us a meaning. Now, so I need to change the candle back to a normal size. The line, the trend line. Now, sometimes I'm not using this line that is available on my own here. I put it on what we call session break. You can right click on your trading view and go to settings and then look at session break so that to identify which was yesterday and which was today. Okay, let's go to 1 hour. Now you can see the way I just navigate down. For day traders or scalpers, what they do is just this 1 hour. They don't go to this daily that we went to and all of that. So to them now, they will see a closer range of the market. So that is to say, they will have seen that this market was purely an uptrend, right? Because this is a low, a high, a low, a high, a low, a high, a low, and another high. So the structure has been broken on their own. So they will be fine. Okay, you get it right. So probably, but at a point when they don't trade, because you are not seeing the bigger picture, okay? So it can actually affect us. So sometime, now, so let's look at this guy here, over here. on the daily or 1 hour time frame, these are the things you will have been doing, right? These are the things you will have been doing. So I mark it out. Okay. So I mark them out to just see this. I think this is correlated with this. Okay, so let's go to 30 minutes. Now, where is my entry point of the market is actually 15 minutes, 5 minutes, 1 minute, depending on what you are trading. Okay, now, if you look at it now, this market has crossed above the previous day high. That's where it is right now. So, can I find an entry? You see what I've just done? Very simple, okay? So can I find an entry on this? So you have to wait. The market on 5 minutes, look at it. I trade a lot of things inside my P. So now all of these points, they are liquidity area. So if I mark this point out now, look at it. These are liquidity areas. These are liquidity areas and all of that. So what you want is this guy have broken this. For scalper, they will have traded this and make money. Because as they broke this point and retested, they will have entered trade. Now, what you are waiting for now is for this market to either return back to this source, which is like a demand zone. Now, and if it returns there and now give you a bullish sign, you want to enter and probably target here, okay? You see why we mark all this point ahead of time? I think there's still another point up here and here. Okay, so this is what you are doing per time and allow your trade to be very systematic. Now told us that other things you now add to this, is the indicator. Remember, this thing we are checking is purely price, and that's what we call price action. So the market is bullish, on 1 hour is bullish, on 5 minutes is bullish, on 15 minutes is bullish for now. So that means just wait for pullback. And please take note, there are 3 ways of entering the market. Number 1, you enter the market at a reversal level. Number 2, you enter the market at a pullback. That's a retracement. Number 3, you enter the market at a breakout and retest. So, for instance, when this market was going up, as it got up here, it retraced. This is a pullback. When it showed the signs of continuation, you are entering the market. The pullback, sign of continuation, you're entering the market. This again is another pullback. Then after it finishes this pullback, you're entering the market. You don't buy into the market when the market is trending so massively, pushing an impulsive move. That is called falling knife. Now, if it's going down, the same thing, you want to pull back and see a signs of bullish continuation, and then you find an entry. So 3 ways of entering the market: at the reversal point, and in a key level, at a pullback, and at a breakout. These 3 are very, very important if you want to understand, Parss and the maximize Parss strategy. Now, so, and I said, since you have seen the price action, you actually want to see the momentum that's happening. That's why I said you can use indicator. Now, indicator does not form your decision of trading. It only supports your insinuation. So right now, the market was bullish because if you look at the MACD, it's even above 0. So I thought about MACD. If you want to know about that, I think those people who are in our inner group or training, they know I've thought about what MACD is all about, what is being used for. It's used beyond what you just like MACD crossover. No, it's beyond that. Now, if you look at the MACD momentum is dropping, and even the MACD signal line, a MACD line is about to cross the signal line. So I have to wait and get the confirmation, either the market return here and bounce, or the market actually crosses down, or the MACD even come back to the 0 before you find a buy. Another thing that could happen is if the market now come back here and broke this line and now retest it and get rejected, then you want to sell down to this point. Are you following now? So to this point and to this point. That is to say the market actually just finish and flush out, the yesterday high, and then that was a fake out and come down. Okay? All right, sorry for the interruption. Like we said, all right, so as we continue doing what we're doing, that if the market now actually give us a bounce, then we're buying, or could return back down here, could return back down to this point, right? Return back to this point, then we want to look for a buy. So, but right now, am I supposed to buy? The answer is no, you're waiting. So let's go. We now say this indicator help you to check the momentum, and then here you are still watching and to see what's going to happen. The next thing I want to add is now the trend. Remember, I told you momentum, trend, price, price, momentum, trend, price, momentum, trend, momentum, trend, price, momentum, trend. Your eye is on the price, and then next you want to see the trend and how is the momentum. Is it strong enough to continue pushing, or the momentum is failing against where you are facing? And that's what we call scenario trading. Now here you go. Now you can see the MACD is still pushing down. Maybe it's going to be a major push down. Now this major push down may come to 50 moving average, and that's why we talk about the trend indicator. But listen, you're not depending on the trend indicator, neither are you depending on the momentum indicator. You're using them to support your decision. But that means you already have a decision, and then you only use them as a confluence to help. If you depend on indicator, I'm telling you, there are things you will miss. There are trade you miss, and then you will not really enjoy it. Okay. So, but you should have your decision. Of course, we're looking, okay, the price is pulling back. How long will it pull back? To what extent, and all of that. And there are other things too we do advancedly to actually check to what extent would this pullback happen? Where is it going to stop? And all of that. There are other things you do to check that. So, but for now, the question you ask is, why don't I short at this point? No, that's why you are mechanically trading your market. You're not just gambling or trying to figure out and sharp getting some down and all of that. So it's above 50 moving average, though this is 5 minutes. Now you want, so this now may form a confluence. By the time I return back here, now maybe this will have fallen down here and start reversing and then bounce on 50 moving average. Sometimes when the market is moving and distance itself from 50 moving average, the next time it will touch this 50 moving average. So the next time it will touch below and still recover. After that, it may fail to continue that direction and then until it reverses. So that is to say, this we're waiting for us. So, but let's assume that when the market traveled down to this point and it got a bounce, that means at that point you are looking for a long, maybe somewhere here, and then you are using your stop loss down. Maybe there's a week that happened and all of that. Then you are not saying minimum you should target is 1:2. If you look at it, by the time it's going to get to this point, this is 2.11. And that's about, okay, if I want to lose how many? 20.7 pips, I'm going to be making about 43.7 pips and all of that. And then you set the trade and let's run. So, but now, can we set any trade? The answer is no. But you have seen how we confluence this. If I still only go to 15 minutes, you're going to see that the pullback was obvious. Look at the candlestick. This is what do we call it? Gravestone doji, and then followed by an engulfing candle. So you want the replacement probably to cover this gap. There's an imbalance here. By the time you mitigate it, which is going to almost align with this point, or probably check down to 50 moving average, and that's why you're waiting. Do you get it now? So it's very simple, but if you complicate the whole thing, you will never enjoy it. And if you quickly go to why I traded gold down and up this morning, was very simple. If you look at it, it's a similar thing that occur. Now look at gold. Why do I mark this point? So you can see gold, right? Now, why do I mark this point? Now, if I go back to 5 minutes, probably to find an entry appropriate as possible, was that I do something in 5 minutes. Very, very important. It's a secret. And many of you probably may not understand. What do I do in 5 minutes? Very simple. What I do in 5 minutes is this. Now, look, I see that below 50 moving average, anything below 50 moving average, you want to look for a sell. But as it's below 50 moving average, you're saying, okay, it's a downtrend for that time. But the candles that are showing, are they showing the strength of momentum down? And then you now confirm. If now look at the MACD, you can see that there was a crossover here, but the momentum was very poor and all of that. It kept rolling around and didn't distance itself away from the 50 moving average. Beside, there's a line withdrawn here. That is when you have actually done this at the higher time frame. That means the thing is still, but look at it, immediately it crosses below the line, and look at it, an engulfing, which shows a strength of that continuation. And if you look at this MACD, the selling pressure volume is now much. That is to say, if you are not even entering at this point because you're still contemplating, though this, I have another line here, probably I may not be able to explain all those lines. How do I come about them? Now, so confirmation of your selling probably maybe here, because after all this, you got an engulfing candle. That means it's below this point, and then the close of this candle. Then you are targeting above your 50 moving average and above this point, and targeting 1:2. Let's go quickly. Now, 1:2 is actually almost to this point where the market is about to make it up. Now, you have taken this trade, and then the next thing is that you still want to find another sell. But unfortunately, look at your MACD, it's returning back. That's not enough. Having the about to return back, let's close the MACD and close our eye to it. Looking at the market price, it says, I do something on 5 minutes. Every time the 5 minute move to a point and have a pause, I call it a support or resistance. So if it's going up, like if I have a pause here, I call it what? A support, a resistance. Like here, this is a resistance that I could mark like this. This is how I mark it. And very simple. And most time I'll be waiting, I may not happen. Now look at it. I haven't marked this point out, which may not even be in consonant with where the market is coming to here now. Okay, so I haven't marked this point out. See what I was expecting. Three things when I mark this resistance out. Number one, I expect the market to go down and return back to that point and get rejected, which is sign of weakness, and that will call failed rally. That's number one. Number two, I expect the market to return back into this point and have an equal, which is M pattern, right, of this. That's number two. Number three, I expect the market to rush back and run into this thing and now cross above this point and still return back to the range. Then I'm going to be selling, which are three things. But now what happened here? It was a failed one. So it means if you understand your price, at this point, before your indicator, you will find an entry at this point, which means your sell position will have been here, but you are still afraid because you are above 50 moving average, which you don't want to complicate issue. But there's a factor that make you to sell this. So 1:2 at that point, look at it. So 1:2 will have happened here, right? Now, but this is not possible if you're actually following simple instruction and follow maybe simple instrument. Now, you miss out of that. Now, the market continue and rally down, which means this is another entry you will have found here. Somebody follow me, please. Now, if you are in the market actually following this, so this is another market you have found here, which is this engulfing candle. At the close of it, probably is going to be your entry. And so that means you're actually selling from here, this close of this candle, and your stop loss now above this point. And 1:2 again. Can you see now? So here, sometimes you may be trailing the remaining one, but you are finding 1:2 as it were. Now, so continue. The market continue here and then move around to this point. So now you ask me, Felix, why do you enter here? Now look at what happened. I entered this, I bought this market, and I think I sold here. And I'll tell you why I sold there. Now, what I expected was that the market actually came down to this point, and I found a support. Okay, both this candle and this candle, I found a support, and that's why I mark. You see this line? You see this zone I mark? Can you see? I find a support. And now what I want is that let market push up, aggressive move away, all right, to create a kind of gap and then come and pick it to cover it. And that's exactly what happened. The market aggressively move away. At the returning back here is my entry because this is scalping. And so you have to do what we call sniper entry. So I'm getting a sniper entry because that's a massive move, right? You get it now. So with that, I now say, okay, what happened? I take my entry as it comes down here. This candle already failed to this point and another new candle and all of that. So it means the close of this candle is my entry. Sometimes you wait for an engulfing candle to actually come up, but this was already false confirmation. So entering from here was already a 1:2. Probably this is below this point as your support, right? Then if I move here, 1:2. So 1:2 was that point, and it aligned with this line. So 1:2, how many pips did this? Is 160 pips, ladies and gentlemen. And he sold, he bought and gave me my position. Now, next, I'm now calculating. Look at another one here. The challenge you're now having again here on this same gold is that it's above 50 moving average. But look at what you're going to do now. I mark out this point again. Probably I may find a sell here anytime now. I mark this point. And so what I wanted is the market, because this is 50 moving average, I want a bounce, okay? If it bounces, so I want a bounce of this market and get rejected here, and I'll be selling down. Though this will look more difficult eventually, but of course, we didn't even check market direction of this one. We didn't check that is going up or coming down. So, but this is scalping. Sometimes you can lose out and all of that. So with this seems to be like a failed rally. But if I have one engulfing candle, I'm going to confirm. If not, the market is supposed to come back here, and I short the market targeting 1:2. Because if you enter the market here now, that means if I'm going to do that, it's going to be very small positions that I'm going to do, because the market is going to bounce up, and then I'm supposed to wait for it to actually come to react here. And remember that this above here is a liquidity, and this one too is an external liquidity. So if the market come there, that's where you're not going to be struggling. So if you look at 1:2, if you are entering, that means you are still looking that it should come down to this point. But to what extent is your strategy going to work? Now let's look at your momentum. Now the MACD has actually crossed down and all of that. But the challenge is this: I need a recovery to this point and then rejection to sell, as it were. So, but if I take any position on this guy now, that means it's going to be very, very small. So in case, right, because you are above 50 moving average, this saying the momentum is up, right? So if I go to my trading platform, for instance, let's quickly go there. I go to my trading platform and look at, this is gold. So I mostly trade gold anyway. So look at gold. And if I'm going to find a small position, maybe 0.02, just to do experiment for you guys. And I say, okay, sell. Okay, can you see now? I've sold. So ordinarily, like I told you, so let's look at it. And ordinarily, this is, so this is, this is a resistance. So which I want market to run back to and reject, because even if he has not rejected, if he has not run back to here and reject, it's still very somehow. So once he come back here and reject it, that I want to sell. But this seems to be like a failed one, but it has not totally failed, because look at by structure now, look at it. By structure now, can you see something? This is a low, this is a high, 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 right? Now this is the highest. Now the low that gave birth to this high is this. So until the market actually break below this point here, before you can confirm that what the market has actually changed character and shift in structure. So with this, breaking of this and then the next retest will have been an entry. But sniper entry traders can risk anything, and then when they failed, they want a return back to this point and fail for them to find an entry. So anything you are doing, remember I said, is still above 50 moving average, is a little bit risky, right? And so that's what you need to know. Okay, so for me now, because I entered wrongly and just because of this, so you can even see how a wrong trade can be and how a right trade can be and all of that. So I quickly want to go and push in my stop loss, which are supposed to be, I should wait and the market come back here. So like I say, if I'm going to go to my stop loss and take profit, so I'm going to be targeting, let's look at it. I'm going to be targeting 3381, something like that, 3381, which is about $18, so it's not much. So my take profit, let's say I still target down here, 3350, 3350, something like that. Okay, 3350. Let me just put it there, okay? So I now click confirm. So, but you wait for proper confirmation, and that's like this trade now that I just jump into. It's not an A plus trade, right? So because and perhaps because if you are not in the market monitoring the right thing, then you are going to create a failure for yourself and all of that. So similar thing here. Guys, can you see now? This one we're targeting, you know, we're away. Now it has reacted that, okay, man, I really want to now start bouncing up and all of that after the pullback. So this candle close, show more bullish, and then you're now entering and put your stop loss below this 50 moving average and continue your market to be rallying up. Are you getting it now? So most time people don't pay attention to all of this, and that's why you enter trade and you're not praying, hey, oh, market, return back to my entry, I enter this thing and all of that. It's about knowledge. You have to understand, discipline yourself on what you're doing. Can you see now what I told you, that we're not supposed to enter, we want to wait. So you see the market. And so what can happen if the market now eventually not get rejected here? That's going to be a problem. But when we return back here now and show the sign of rejection, and all of that. You probably want to add to the positions and trade it. And that's exactly what we say about this MACD, support and resistance and all of that. And then if you work on this thing, trust me, you are going to be in so much money. Like I said, it happens in all the market, not only Forex, Forex. The same thing is applicable to synthetic market and all the like. Okay, you heard me right? This is the same thing applied to synthetic market, for crypto market and all of that. I just hope I could find the synthetic environment here. All right, this was a trade that entered in the morning. I'm sure it must have even returned back again. Network somehow. Okay, fantastic. Now, if you look at this trade, I enter in the morning, right? If I show you this trade, because I was trading this with a very small account. So the money now is $11 profit. Because I just entered one position with small lot size. It's $11. But if I tell you when I entered, right? Let me show you something. When I entered this trade, right, it was still struggling. After the entry, it was struggling. It would give me a kind of loss, a drawdown and all of that. But if you see what I did, so I actually saw that the demand zone is here, that the market was supposed to return back. Now, it's the same thing that is applied everywhere. I think I sent a signal for people to even enter short, and eventually you can see now this one is still struggling because we find a kind of break of structure and all that, but still struggling. But this is a peculiar market anyway, because maybe because of there are no volatility or volumes are not in this place. You see now, I refuse to enter this one because overall trend of this market is an uptrend. But yesterday, we traded this market very massively down to a point, to this point, and we now say everybody should buy. You go to my Telegram channel of the people who give signal to, say they should buy to this point, sell to this point and look for a buy. And there are conditions for that, what warrant us to tell them to buy, from there having sold down and all of that, right? Now, so there are so many instruments that is still the same pattern, all right? Okay, you can see this now. Today, I found a trade on this, and I say I was taking profit at this point, and I say, except if you break this point or reject it, I will sell down, or better still, maybe a pullback, and look at what it's doing, right? So after breaking this point now, I want to retest, and then I'm going to be looking for another buy. So it's very simple. You do not need too much complications to be profitable in the market. But sometimes market can twist you around, so you need to understand that's exactly why you did put stop loss, and so that to mitigate some of those risks that can be available. So imagine this one sold down with good profit first, return back again. Now it's about to sell down and all of that. So the same thing to all the markets in the derivatives, synthetic, and all of that. So, ladies and gentlemen, this is the basic thing about this Parss strategy. You can't afford to miss anything. Tonight by 8 p.m. West African time, I'm going to be live, and then you can connect with us. You want to chat up with me to be part of our internal system, is the +234-90470, +234-9047044 and 998. That's the WhatsApp number. You can chat and I can respond to you, or somebody will respond to you. And then let's show you how to enjoy the space. It's so amazing. Ladies and gentlemen, you can't afford to miss out. Wake up, build up yourself, work 3 month to 6 month probation to know how to get yourself paid salary of minimum $2,000 every month. Not Ponzi scheme. Doing it by yourself, leveraging on people, expert, AI, and so many other things. That reminds me, if I show you some other connection we have in different platforms to get information, because we are in economy, the information economy. So this is an information era for your economy. You don't have access to quality information. I'm sorry, you will struggle, and yet will not be able to produce the right results. So it's about leveraging. And so my name again is Felix. I'm the team leader of Plan B Express. So what I'm showing you is a simple strategy that can work with you and give you enough money without stress. Does that get that? Now, what do I mean by stress? Stress is not only when you have issues to meet up with things, but stress is when you are even confused. When you're not sure what you are doing, is a big stress. So you can see that the bigger stress is when you are confused of don't know what to do in a daisy environment. You now be asking yourself, what should I do? What should I not do? What should I do? What should I not do? So this is amazing. So thank you very much for your time. See you tonight, 8 to 9 p.m. Nigeria local time. We'll be unveiling to you how to achieve your financial freedom and pay yourself monthly salary without stress. Bye for now. Thank you.